Hello, trading has closed on the 29th of December 2022. Let's do our disclaimer first. It's my trading plan for tomorrow, which is December 30th, 2022. Please remember I can be wrong. Any trades you make should be at your own risk. It pays to advertise. I'd appreciate it if you like the channel to click like. My book is out of print in terms of paper copies, but people can still get the electronic version. It's called the MEJT system, and if you do find the system helpful, it would help me if you went to Amazon, looked up MEJT system, gave it a 5-star review, and said the system works. Thanks so much. Look for the pattern with the early low, which is this, and tomorrow should also have the early low. We had some price targets. In spite of this big drop, we had much higher targets, 38.17.49, 38.33.79, and those numbers printed, those are the red lines. Now this really isn't a very positive action. It can all be invalidated tomorrow, but let's go over some stuff. First of all, MEJT identified this move as false, said price would retrace, and they certainly did. You can call this a cup, you can call this an upsloping handle, but even if this weren't a cup, when you gap up like this and slope up without forming a handle, I view it as a negative pattern, and the target is to retrace all of this move. Now it can still be invalidated if we gap up and take out these highs. It doesn't have to do that. It can still gap up, take out these highs. But there are a number of factors which at least argue against that happening. One is we gapped up, hit a higher high, closed under all the highs. That's a negative pattern. Again, if you gap up, take out these highs, gap in either direction actually, and take out these highs, that pattern's killed. But for right now, even though time hasn't run out, we've gone nowhere for hours in spite of this impressive start. And if we don't get reinforcements close to tomorrow's open, we should trade down. Here is the chart we've been showing. This is wave 1. We said yesterday this was a wave 2, but nothing prevented it from going up today. Even though yesterday was a big down day, we did have indicators which pointed to today going up. So is anything preventing us going up tomorrow? Well, here's my count. There's 5 waves down. There's your ABC. There's wave C. There's wave A, ABC, A equal to C. You look at wave C, ABC, A is equal to C. Doesn't mean you have to stop there. It could still go up. C doesn't have to be equal to A, but it is pretty often. And if we don't go up, if we do start dropping, this count argues for us being in wave 3 down. And wave 3 is usually at least equal to wave 1, and that was 300 points. So if we don't take this out early, it could be big trouble, really big trouble on the downside. Now, of course, tomorrow's the final trading day of the year. There are tax considerations and final trading of the days of the year. You just can't be as confident in your predictions, and you have to bear that in mind. But for right now, even though it can be invalidated tomorrow, this is an extremely negative pattern. Friday's pattern has the early low. It could still gap up. We gapped up, hit a higher high, closed under intraday highs. Unless we gap and promptly overtake today's high, pattern's negative for tomorrow. When today's normally bullish pattern fails to hit a high in the final hour, it also produces a bearish pattern. Once again, gapping either direction, promptly overtaking the high a day vitiates this. There's a wave count compatible with today being the end of a wave 2 correction higher, with wave 3 down starting. Remember, wave 1's 300 points. Signals are more prone to failure as the year end, but if we can't clear today's high promptly, I look for prices to drop with the possibility of them dropping sharply, and I mean very sharply. Doesn't mean it has to happen. We open up here, the whole negativity goes away. But if we start down here, it could be a long fall. Tomorrow's pattern has yearly low, and that's today's call.